Hi, everyone, and welcome to Navigating the Affordability Crisis, Accelerating Industry Performance with Precision and Scale. This automotive news webinar is brought to you by MarketScan, now a part of S&P Global Mobility. We're delighted you're with us for this presentation. I'm Emma Hancock, host, strategist, and moderator at Automotive News. Before I introduce our speaker today, a navigation tip. We encourage you to ask questions at any time. Just type them into the Q&A box on the left side of the webinar window and then hit send. I will steer your questions to our speaker toward the end of the session. Today's speaker is David Mondragon, Vice President and Managing Director, Incentive and Pricing Solutions at S&P Global Mobility. And now I'll turn it over to David to get us started.
Thank you, Emma. We're excited to be here. We're excited to tell a little bit of the story of what's happening in the industry. And set it up, I'd like to start with a little bit of overview. I like to give everyone a little background on S&P Global Mobility, who we are, what we do, a little bit on our most recent acquisition, MarketScan, and what capabilities they bring to bear for us and for the industry. I want to get into current market conditions, what we're seeing in the industry, what we're seeing in terms of consumer buying patterns and behaviors, and then how to address consumer affordability. Really, the topic is around consumer affordability. There's a crisis in the industry regarding affordability, and I want to get through a lot of the reasons why, and then how to respond to that, and how to address the marketplace and be successful over the years to come. So with that, let me start with a little background on S&P. We're a very large company. We have over 40,000 employees. Last year, our income was over 11 billion. We're very diversified. We have 5 different divisions. I'm focused, and the focus of our discussion today is on S&P Global Mobility, right in the middle. We have a market intelligence group. A lot of people know our company as a ratings company. We have commodity insight, and most anybody that invests in the stock market knows the Dow Jones Index or the S&P 500s that are really barometers for the economy and bellwether stocks and portfolios for customers to own. Again, my focus is not on the other ancillary businesses within the company. It's on global mobility. As we look at the next slide, we take a look at what really S&P Global Mobility stands for, our solutions from start to finish. We really have a very wide bandwidth with regard to the marketplace that we support. We do build and planning, so forecasting and planning. We have a whole group of people that do this virtually for every OEM and every supplier in the industry. We do all the light vehicle sales forecasts. We work with them on product complexity, product components as they look at the industry going forward. With regard to sales and marketing, that's the sweet spot that I'm in. I'm in vehicle pricing, payments, and incentive analytics. We're going to talk a lot about that today. And then we have vehicles in use, so aftermarket performance that we do in the marketplace. We own 4 companies. We own RL Polk. A lot of people know RL Polk. When I was on the OEM side of the business, we use it on a daily basis. What's our market share? What's our cross-sell? Where are we performing well? Where's our weaknesses? How do we want to address that? We have Automotive Mastermind, who has about 2,500 dealers on their platform. They have a great retail go-to-market and marketing platform that they're able to support the marketplace with at retail. Then we have MarketScan, our new acquisition. I'll talk more about MarketScan in a minute. And we also own Carfax. So our global mobility capabilities have pretty wide bandwidth. Traditionally, what we've done has been in descriptive and diagnostic analytics. And that really is a chance for our customers to take a look at, how did I price my performance? How did my price impact my performance? What should I do differently? And then what we can do as a company, we can triangulate a lot of different factors in the marketplace. We can say, let's lay out sales, market share, stock, production forecasts, price and payment. We can triangulate all these data points and create some really valuable insights for our customer to say, where am I at? Why am I at there? What are the factors that are impacting my current performance? Then from there, we go from diagnostic and descriptive to predictive analytics. How competitive am I in the marketplace? Do I need to make a change? Where do I need to make the change? And how will that impact my performance? Finally, we're building a lot of new artificial intelligence technology around prescriptive analytics. What does my price need to be to achieve my volume, share, sales, production targets? How can I optimize my price for the most profitability within my portfolio? How can I shift with regard to trim or mix to be able to maximize profitability? Do I need to shift my production and availability into certain market areas that have better performance for us and have higher opportunity for sales growth and share growth? Those are the analytics that we pull together with our product and our data, and we're really excited to move from descriptive to prescriptive. These analytics help us war game the marketplace for our customers. We can go in and we can war game scenarios, say, if you do this, this is your expected outcome. If the competition does this, this is your expected outcome. And then come up with scenarios that'll say, here's how I can fend off competitive actions, or here's how I can go on the forefront of competitive action. So really helpful tools that are exciting for our OEM partners to be able to leverage in the marketplace. When we take a look at the industry in total, some of this data you might already know. 95% of the vehicle buyers use digital as a source of information. That's a well-known fact. What's interesting to me here, though, is not the 95% that are using digital as a source of information. It's that twice as many start their research online versus at a dealership. That means the online experience for a customer is so important. Transparency, clarity, and consistency from tier one, the OEM space, all the way to tier three at the dealer space. It's so important that, again, it's fast, it's convenient, but it's transparent for the customer. Next is 30% of the consumers want to buy their next car entirely online. This is an interesting stat because we think that 30% is going to move to 50, 60, 70%. There's a lot of reasons why, and I'll explain a few of those reasons why in a few slides to come. A big portion of that, we're seeing a big demographic shift with younger buyers being the prominent source of buyers in the marketplace. We're also seeing a lot more startup EV companies that are coming with an end-to-end shopping solution for customers online, where they'll sell directly to consumers and take the dealer out of the equation because they have no dealers associated with a brand. Obviously, Tesla is the key nomenclature that has driven a lot of that movement in the marketplace, and will continue to drive a lot of the movement where other companies will emulate their platform as they come to our market. To help engage our customers, and our customers are OEMs and dealers and digital retailers, to help them engage car buyers, we do quite a few things. We help them determine who's in market. We help determine what car or model that they're interested in buying. And we have data that helps us define when they'll buy and if they'll buy a lease or retail. We track over 110 million garage households. We've been doing that for over 35 years. And we know exactly the number of vehicles in every house, what type of vehicles they are. We know if they're leased or bought. We know how much was paid for the vehicle. We know the affinity. And if you look at the track over those years, you can find when customers are ready to buy the next vehicle, and then what's their affinity modeling, what vehicle will they most likely buy next. That's powerful information. What Mastermind brings to the table for us is the ability to determine what price. That price elasticity is of utmost importance as we look at the marketplace going forward. The ability to call out all the other factors when a customer is in market and what they're in market for is very valuable. But when we add a what price and we understand the price elasticity for a specific customer, we have a tool that's very powerful for OEMs to be able to leverage in the market, as well as digital retailers. We believe the industry will actually transition from public offers, which are kind of peanut butter style, where everyone gets the same offer, to individual one-to-one private offers in the future. And we're going to be at the forefront of that transition. Over on the far right, it just talks about the metrics behind our products. We're very good at giving great return on value with regard to audience results at lower price per acquisition, higher close rates. And a big number for Automotive Mastermind is they deliver a 3% uplift in loyalty. When I was at an OEM, we would fight just for half a point of uplift in loyalty. But for them to have very definitive results that show a 3% lift versus non-Mastermind dealers with regard to brand loyalty is a really powerful statement. Let's go to the next slide. Quick level overview of Market Scan. This has been a really exciting acquisition for us. Again, They are the quintessential provider of the marketplace for automotive payments. They can give you the exact payment, and they can scale it from tier 1 to tier 3 to create a tierless platform with consistent pricing and transparency for consumers. They generate 300 million payments each day, 8 billion payments a month, and nearly 100 billion payments per year. That's a staggering number. They service over 12,000 dealers, and they have over 40 automotive software providers, OEMs, and lenders as partners to their business. Really exciting for us, acquisition, because they have 6 years of pricing and payment data that we're able to use and triangulate, and we were able to use that as we triangulate against market share, sales, market, advertising weight, a lot of other factors, as well as stock and production, to say, how am I performing, and then create wargaming market indicators to say what happens next in the industry and recommend to our clients what's the next move in the industry. MarketScan also supports 3 verticals, so digital retailing, dealer tools, analytics. So they have a calculation engine that delivers exact payments, including tax, license, incentives, geographical level. This is really interesting at the geographical level because we can get down to the dealer or the zip code or the region or the market area, or nationally as well. So they can scale it as tight as possible or as loose as possible to get the greatest outcome. They have M-Drive, and we're going to talk about that a little later on. This is a platform that allows customers to shop by payment. So they factor out their budget, and the shopping tool filters out everything except for what's affordable for the individual customer. And I want to just hone in on that a little later. We have M-Desking, which is a dealer-facing tool that helps dealers analyze OEM lender programs and to provide the most competitive payments in the marketplace. And then we have some really amazing analytical tools with M-Scope and M-Gauge that helps OEMs and finance companies understand their competitiveness in the marketplace. So with that, that's background on who we are, kind of what we do. I didn't want to spend too much time, but I needed to give you a little bit of background as we get into the context of the discussion. And that's really, what are the current market conditions we see in the industry? So first and foremost is the sales forecast. So you can see in 2022, the industry sales in the US were a little less than 13.9 million. It was down 8% versus 2021. We really had a great recovery in 2023. So the industry has grown 12% this year. That's our full year forecast, a very strong rebound. And then you're going to see moderation over the next 2 years, 2% growth next year, 4% the year after. A lot of this is OEM stock discipline and vehicle affordability is going to force moderation in the industry. If you look at the little box below, the inventory levels are forecasted to run about 2.5 million or 45-day supply over the next 12 to 18 months. That's pretty monumental, because we're going to be back in a position where supply could exceed demand, which would drive further price compression. However, OEM discipline is showing that they're going to be able to keep our day supply at a lower level. And again, inventory levels pre-pandemic were 3 to 4 million units. So now with more companies representing more products in the marketplace, you'd think the inventory would be a lot higher. But that constraint that the OEMs are showing is going to be really valuable and going to pay huge dividends for them in the years to come. There's a lot of complications with regard to that. That 45-day supply varies by manufacturer, varies by product line as well. If you look at the EV segment, EVs, for a lot of the EV nameplates, they're running around a 90-day supply because stock exceeds demand. And so that's creating a kind of an inverse relationship. We're seeing a lot of OEMs back off on production as we get into next year for EVs to try to rebalance supply and demand so they can hold their pricing. And they'll shift some of that capacity into ICE engines, which have great value in the marketplace, turn easier. And this is really an outcry from both dealers and consumers to remix and rebalance some of the stock portfolio to make the vehicles more attainable and affordable for consumers in the marketplace today. Since 2019, the average price of a new vehicle has increased by 30% to 48,000. This number is actually moderated down slightly. It was at 50,000. So 48,000 seems like a bargain. It's a couple grand less, but it's still a staggering number when you think about it. And this makes monthly payments much more relevant today than price. And we're going to spend a lot of time on payments versus price. Over on the right, you see in just 7 years, the percentage of registered vehicles with manufacturer's suggested retail price below 30,000 has decreased from 50% of that marketplace to only 14%. So only 14% of the vehicles in the marketplace today have a MSRP of 30 grand or less. That's a staggeringly low number. It creates affordability factors. It creates barriers to entry for a lot of the brands that are in the marketplace. And it creates a big void in the marketplace for consumers that just don't have the wherewithal to be able to afford a more expensive vehicle. It forces them into a slightly used CPO or a used vehicle. The challenge on that front that we'll talk about in the future slides is that there's just not enough supply of those vehicles in the marketplace to support the market. In March of this year, the average monthly after-tax salary in the U.S. was only $4,300. If the average, now let's factor in the average monthly car payment of nearly $800, and that's nearly 20% of average after-tax take-home pay. That's a huge number. And that 20% does not include insurance. It does not include fuel. It does not include vehicle maintenance or repair or annual registration fee. If I add all those factors in play, then we're probably looking at a number that's closer to 40% of average monthly after-tax take-home pay, a staggering number. That only leaves 60% of that take-home average pay for house, for food, for education, for clothing, for furniture, for other amenities that people might need. And that, again, speaks to the affordability crisis in the industry. Nearly 15% of today's buyers are financing a new vehicle are paying more than $1,000 a month. Some of that has to do with negative equity that they're carrying over and putting into a new vehicle. And we'll talk about that as well in a minute. Other market factors that are leading to this and have supported and prompted this affordability crisis, and on average, new car buyers are carrying negative equity of $5,800. Now that's new car buyers that have a vehicle that's financed and then are trading in. It's roughly 1 out of every 5 customer, or 20% of the industry that has negative equity, and it's a staggeringly high number. It represents 12% of the average new vehicle purchase price, and in addition, it's forcing other actions in play, like finance contracts being elongated. The average finance contract today is at 68 months. We're going to see that grow to 69, 70, 71, 72, as it's one of the only avenues for customers to reposition this negative equity into a new vehicle and then try to keep their payments to an affordable level is to elongate the purchase cycle. Now, some people think that leasing is kind of a silver bullet here. We can shift to more leasing. Well, leasing today is below 20% in the industry. It was running about 30% pre-pandemic, but shifting negative equity into leasing is complicated. First off, the interest rates are highly savine. The residuals are highly savine. So the cost for an OEM to savine a lease versus a retail is about twice as much money out of their pocket. Additionally, when you add $5,800 of negative equity into the loan, you're creating a different risk factor. And you're probably creating a different payment scenario because of the tiering for the customer. So it creates a lot of different issues that create volatility in the marketplace. Consumers are changing their shopping habits, and we're seeing some pretty interesting developments in the industry. First, as we know, monthly payments are more relevant than price. Shift towards digital retail is the reason why, is customers are frustrated. They're being quoted lower payments online versus actual payments in store. We need to find a bridge between those where there's transparency and consistency between online and offline purchase prices. There's an opportunity to bring the same accurate payment anywhere along the sales process. You've seen and everyone's read about the Amazon Hyundai relationship that spurred up This is probably not the last of these kind of relationships as we go forward. We're at a crossroad in the industry right now, and unless the OEMs figure out how to do it on their own, consumers, especially this younger buyer, these new consumers, are going to migrate to solutions like Amazon, Hyundai. And I think there'll be more manufacturers that will seek out companies like Amazon, big box retailers that can create a turnkey solution for their consumers. And if it's not Amazon, it'll be Google, it'll be Facebook, it'll be Costco, it'll be Apple. So this is an important juncture and a crossroad, as I said, for the industry to take. And we need to keep this in-house at a lot of OEMs, or it's going to expand out to the third parties that will take over this relationship with their customers. Changing demographics is a key point in driving that shift in terms of digital resources and digital shopping. As you see, there's been a gradual shift with Gen Z or Gen Y and Gen Z customers are purchasing more and more and having more influence over the purchase funnel. The tipping point comes mid-decade when basically Gen Y and Gen Z consumers are 50% of the market, and then they start to exceed. As they start to exceed, they will have different demands in the marketplace. These buyers focus on monthly payments rather than total purchase price because of their budgetary constraints. Millennials' expectations are very different as well. Most are easily frustrated with slow, cumbersome processes. They are conflict adverse, and they want fast and fair deal at a payment they can afford. I wrote in the bottom of the chart, digital versus analog consumers. Now, it's not actually the case. There's a lot of Gen X and boomers, like myself, that are somewhat digital or digitally savvy. However, the difference is we didn't grow up in a digital world, in a digital environment. I didn't grow up with an iPhone in my hand. I didn't have access to Google when I grew up. I don't have access to technology, which has created an expectation for speed and transparency that we will never be able to overcome. That expectation is going to be here today, and it'll be more prominent tomorrow. And if the marketplace does not meet that expectation, the companies that don't meet that will lose. Consumers ask today two questions. First, what can I drive? What are my payments? What's my down monthly payment? And the answers to these questions are critical as we look at incentive programs, rebates, and how do we address affordability concerns. Why are the payments important? 84% of consumers today have a payment. It's either retail or lease. A very small percentage of the customers can actually pay outright for their vehicles. Today's car choice remains rooted in consumer budgets. McKinsey just finished a study that said more than half of the respondents wanted to choose a monthly budget before they picked the brand or before they picked the vehicle. They needed to know how much they could afford. And right now, many customers leave automotive shopping site frustrated because they can't find anything that fits their budget. It's not how the construct of most of the sites are built. Most of the sites are built looking at price of the vehicle, not payment of the vehicle. There are solutions in play, though. This budget-first mindset can be addressed. Today's consumers want to indicate their available budget to drive product selection and are looking for platforms to provide vehicle options that fit their budget. That's the most important part of this paragraph, is consumers are looking for platforms, especially next-gen consumers, that provide vehicle options that fit their budget. They're not looking to force a budget into a vehicle. They need the budget to be forced into the selection of the vehicle. The disconnect is today's buyers must check prices one at a time, and payments vary significantly by channel. If I look at, for the same vehicle, I can see an advertisement at one price. I get an email offer at one price, a different price. I get a look on a website, digital, phone call, get a different price. They're getting hit with so many different prices that consumers can't understand what's truthful and what's not. And that lack of transparency, lack of clarity creates distrust in the process. Ultimately, it creates lack of loyalty, lack of retention, and it reduces the sales opportunities in the marketplace for any given dealer or OEM. The shop by payment can remove this emotional load in the purchase experience. These are the most difficult parts of the transaction for a customer, is how do I compare prices? How do I feel comfortable with those prices? How do I negotiate the deal terms? So I'm going to show you an example of what it is today and the new way to shop. And we have a solution in place at MarketScan that helps. First and foremost, today, which I call the old way, consumers go into a dealer inventory or an OEM dealer or an OEM shopping site, and they have to pick one vehicle at a time. They might pick a car, a truck, or an SUV. And then they have to calculate the payments, again, one vehicle at a time. They go through and they pick the terms and conditions. They say, what's the term? Maybe a 60-month retail contract. What's your down payment? Maybe I'll put down 10%. Do you have a trade or not? Yada, yada, yada. Then it runs through and delivers a payment. That's one vehicle at a time. And for me to do that, or a consumer to do that on the majority of websites, it's slow, it's inconsistent, and it's unbelievably frustrating. I've done this myself, and it takes forever to compare vehicles at a payment or price relationship. The fast forward new way and the fast forward opportunity in the marketplace is by leveraging new products. And we have a product called mDrive that can solution for this. A consumer can go in and give the same terms and conditions. I want to put X amount down. I want a 60-month contract. I have a trade or not. And then here's my budget. I type in my budget, say it's $500 per month. The filter in milliseconds can go search the dealer's inventory or search an OEM inventory to say, here's all of the vehicles that fit your price category based on the terms and conditions you outlined. And it can serve up multiple vehicles at one time. More importantly, with this large selection, a consumer can easily scope down and say, okay, I said SUV, but now I want to scope down to just large SUV. Show me all the payments fall in my category for that vehicle segment. And then I can base it on trim and change it even further, refine the offering. The key to this is it's fast. In milliseconds, it can be provided. It's accurate. It's empowering because now the customer feels like they're in charge of the journey. And it's very robust. Equally important for the dealer or the OEM, it's sticky. We also think it reduced shopping time by as much as 50% as we present a faster purchase funnel and a faster accelerated glide path for the customer to go through the purchase funnel to decide on what vehicle they're actually interested in buying. They can do this at home or in the showroom. The exciting opportunity for us is we've extended this with an app. And this app allows and empowers a consultant on the showroom floor to do exactly what the consumer might have done. If they've already done it online, we can transition that data right to the app for the consumer. They can look it up by the customer name and information, or they can start anew. I can qualify a customer. I can ask, how much cash they want to put down, or the miles you want to drive. Is it a lease, a retail, or both? What's the terms and conditions? Boom. I can also say, give me your minimum and maximum payment, and I can search every vehicle in my inventory. This is a really unique proposition for an OEM that wants to search by geographical area, search all inventory, and then let the customer hone in the selection to the right dealer. It's also a unique opportunity for a dealer with multiple franchises. If I'm a dealership and I have 10 franchises, I can have any one of my sales consultants at any one of my stores search every unit in stock at any of my 10 franchises. And I can search by payment so I can satisfy the needs of my customer. If I don't have it here, what do I have on a different lot at a different store that can meet that same needs in terms of the qualifications of the vehicle for a customer? Again, this is a very unique way to accelerate the glide path for a consumer, but most importantly, create a tierless marketing platform where we move from tier 1 shopping to tier 3, and we put the power in a sales consultant's hand, and we put the power in a consumer's hand to be able to shop very quickly in a very crowded marketplace. So that was a lot to cover, and I'd like to just get into the final stage of the discussion. We talked about mDrive. We talked a little bit about the value proposition, but let's hop into Q&A and see if there's any questions that I might be able to answer.
Hi, David. Thank you so much. That was a really fantastic presentation. First of all, I have to mention mDrive. just the fact that it seems like it's that 50% number, really it's 50% faster finding, payments that are going to work for someone instead of, that old fashioned model that you showed us. Really, really something else. And the other point you made, I think it was slide 14 or 16, about just 14% of new vehicle MSRPs being under, what was it, $30,000?
Correct.
That's concerning. So
Yeah, it's a staggering number when you look at it, and it's troublesome for so many reasons. I didn't get into leasing. We have a lot of data on leasing. One of the big things about leasing is just the lack of return vehicles. Since leasing dropped down from 30% to below 20%, the vehicles that'll be coming back to market are about 50% less than normal. And so that's creating a very strong shortage in used vehicles in the marketplace for dealers, and also CPO. These consumers that would prefer to buy new, their second alternative is to buy CPO, and there's just a huge shortage in those vehicles, and we forecast that to continue over the next 2 to 3 years.
wow, incredible. There are a few questions here. So I'm going to just start with this general question, David. We mentioned off the top that MarketScan is now a part of S&P Global Mobility, and you had that great slide just really showing how diversified S&P is. How does S&P support the auto industry? And I think you've really covered a lot of it.
Yeah, that's a great question. So again, we are very much upfront in the building and planning phase. We help supply base, we help OEMs. We have a 5-year outlook in terms of sales forecast. We have a 5-year outlook in terms of product mix, new product entries. So we can really help them define where they need to be competitive in the marketplace and where the growth opportunities are. Then from a sales and marketing standpoint, we really do a lot of work in this space with regard to defining what's the marketplace look like, where are the buyers, who are the buyers, how do you market and improve your loyalty by focusing on your loyal customers, and how do you conquest new customers. That's especially important for brands that have new entries in the market. They can't fill all those entries with their current owners. They have to bring outside owners to fill some of those. And we're going to see a lot of that energy around EVs, as there's a huge impetus to drive over 250 new EV entries by the end of the decade. Finally, we do a lot of recall business. We do a lot of business with Carfax, with defining the value of vehicles, the service history of vehicles, and we give consumers confidence in the marketplace as they buy a used vehicle, as well as the new side as well. On the new side, the last piece is with regard to MarketScan, is we provide a ubiquitous payment solution in the marketplace. We consider ourselves the Intel inside. Again, I said we calculate 8 billion payments a month, nearly 100 billion payments a year for the auto industry in the U.S. We're not the shiny nickel on the outside. We're the workhorse on the middle that's calculating those payments, understands all the rates, residuals, rebates in the marketplace, understands the taxes, the registration fees, and puts all that together with a payment. And we can cascade that from the OEM side at tier 1 all the way to the dealer side at tier 3 to create that transparency for consumers and that speed to market for consumers as well. So really unique opportunity for us to address a big need in the marketplace.
Yes. I mean, it really feels like a 360-degree picture for dealers. And I mean, you can't really buy a used vehicle now without using Carfax. It's just it's not worth it. You have to get the Carfax.
We like to hear that.
But I tell everyone I know, you need to know, because just because of the shortage, people are going to do things that might not be honest. So you need that Carfax. Okay, lots of questions here, David. So let's go to this one and some of them are compliments, David. So great job on the presentation. So here's one from Mary. Mary is asking, how does the solution take risk-based pricing into consideration? Won't interest change the payments?
So the question or the answer is yes. So there's multiple ways to qualify a customer, obviously. we're the intel inside, we're calculating payments. But some of the risk-based marketplace, we know all the terms and condition and the tiering for the lenders. We have all that built into our calc engine. But as far as the qualification of the customer, understanding where they might tier out, or if a soft pull has been done, we have a lot of information about the customer that lets us really refine that payment to be most accurate. That work is done by whoever we're solutioning for. We do support Shop Click Drive for GM. If they desire to get to that level of specificness on the offer, then the customer can do those type of applications. If it's for somebody else like Roadster or other companies that we help support, a lot of those companies will do the soft pull themselves. If they're in dealership, you can obviously do a hard pull, and then you can get to an exact payment. So that's a variable in the industry. Quite frankly, we assume everybody is going to be a tier 0 or tier 1, which will give them the most favorable payments. Unless we know differently, we have to use that as a base assumption to get the payment, and then we can scale from, again, tier 1 to tier 3. It's a great question, Mary. And we can get into a lot of specifics around that if you're interested, and we can explain how that solution works for multiple sets in the industry and multiple different partners.
Okay, great. Another interesting, wonderful question here from Doug. What dealers or dealer groups are currently using mDrive in the US? And great photo of the GTs in your home office.
Thank you. That's funny. I cherish that picture. That's from the Ford versus Ferrari race. That's the original, and that happens to be
Amazing.
the one where the GT came in for second and third in the race. So back to the question: what dealerships are using the platform today? We're not really able to disclose any specific dealers. They consider it a competitive advantage, but it's one that we know that we have some of our larger partnerships utilizing the service. We think it's very viable for a dealer group. I know so many dealer groups, publicly traded groups, individual dealer groups that would want to use this and would benefit from it. We, quite frankly, have just brought that product to market last year. We're just starting to scale it, and we're just starting to leverage the application. We think it will scale very aggressively as we go forward. It's quick for us to be able to assemble and assimilate into a dealer platform. It's also very quick for us to be able to train and upload and onboard a team to be able to use. So it's one that I think will be a game changer for a lot of dealerships as we look at the marketplace over the next 3 years. So great question, Doug, and thanks for the compliment on the poster behind me.
Yes, Doug has good taste. Okay, question here from Randolph. With the Market Scan app for the salesperson, do dealers put limitations on the app access for what the salesperson can share before touching the desk with management?
So Randall, definitely, yes. The answer is yes. There's all kinds of parameters that can be put on it. You can limit the use to certain sales consultants. You can limit the parameters in terms of pricing parameters. You can put in your own gross parameters in there. You can put in if it's a standard rate, if you want to mark it up. You have all the facilities available through our desking tool, and the desking tool is a platform to help support this. So you'll be able to configure it any way, shape, or form that you need.
Great. Okay. I think we have time for just a couple more questions. This one here from Stephen, not really a question, but he mentioned he finds this an excellent way to remove the friction in the buying process. Well done. I mean, I completely agree. Okay. Big picture question here. How will AI influence OEM decisioning in the future in your experience and expertise?
Well, that's a great question. Obviously, it's evolving technology. People think of AI today as ChatGPT, and yeah, it helps in terms of written communication, but we're really excited about its predictive technology and how we're going to be able to leverage it. We're partnering with outside companies as well as inside company. You can imagine a company that is so close and entrenched in the financial community. that we do a lot of work in the artificial intelligence space, machine learning space, to determine different derivatives, different market conditions, different trends, and how they can imply and influence, prices and marketplaces. What we're using it for in mobility is we're using it to war game future outcomes. When we start to lay in our amazing data sets, I can lay in sales, I can lay in stock, market share, I can layer in production, I can layer in advertising weight, brand health, all these other factors. And then I can start to layer that in for not just one OEM or one brand, but for multiple. And I can start to war game scenarios against that. I can say, well, here's your payment on a specific vehicle in a specific segment. And then how does that compare against all others? And what does it look like in terms of my performance over the last 5 years? And then what does it predict if I don't do any change in terms of my relationship in the marketplace? Say I'm a $20 premium in a certain segment to a competitor. What has that resulted in? Say I take that $20 premium and I flatten it out and we're at parity with the competition or keep competition. What will that deliver in terms of output? Higher sales, higher share, higher opportunity to price, more profitable vehicles at a higher trim mix, higher mix rate. And then where in the country do I need to put those vehicles to optimize sales, throughput, and profit? All of those are scenarios that come to bear when you start to use artificial intelligence to influence your decisions. That takes us from a company that does a lot of great analytics on historical data and tells you what happened
Right.
and why it happened and where it happened, to predict the future, to say what's going to happen next. And then what should my next move be from a manufacturing standpoint or a dealer standpoint? This is really advanced technology that's difficult, but the value is incredibly high. The return on investment is incredibly high. We're developing these platforms today. We have the data sets to go to market, and we're really excited about the future and what AI will help deliver. And working together, it's not anything that anyone should be fearful of, because it is going to drive the future, but it's going to drive smart, optimized decisions as we go forward. And it'll play out so many different scenarios at a millisecond of time. And within that millisecond of time, it'll be able to say, are you on path to deliver your market sales, share, and profitability goals, or are you not? And if not, here's what you need to do to resolve that or to address that. Ultimately, the decision lies in the driver's hands. Decisions will always lie within the OEM's hands, but these tools and this technology will help them make better decisions as we go forward. So great
Can't
question.
think of a company. Yeah, I mean, David, I can't think of a company that wouldn't want to have a crystal ball that was reliable and that was, precise. Yeah. So it just makes AI so much more valuable in those terms. Okay, I think we're going to do one or two more questions. A question here from Darwin, and he's asking, your search by payment tool sounds interesting. Does it allow prospects to include feature requirements such as drivetrain, CarPlay, heated second row seats? Like how sort of detailed and granular can you get?
So right now, again, it's based on payment. So we're focused on the biggest pain point in the industry is, what can I afford? How do I resolve that? And then how do I hone it down? So the answer is yes, but the first criterion is payment. From there, we can add in different questions and different level of scoping. Do I need a 4x4 versus a 4x2 if it's a pickup? Do I want over 85 or under 85? Do I want long wheelbase versus short wheelbase? That trim set and that trim technology is available. We have decoding to support it. It's just something else we would have to program into a specific solution set for either a dealer or an OEM. But it is possible to hone it down to those kind of specifications. But to start, again, the most important thing is to understand, what is the budget? If my budget is $500 to $550 a month, I want a specific vehicle. I want to search the inventory for that. What are all the vehicles that fall into my class based on the terms and conditions that I call out? And then how do I take that? And now I can take that very large group of vehicles and hone it down to be very specific in terms of my request and the output. and then I can do that again. What's unique is, and the industry doesn't do it today, which is a baffler, is I can do it against multiple dealers. If I'm a franchise dealer, and I know plenty of franchise dealers that have 10 to 20 franchises. Why wouldn't I want the power of that in a sales consultant that can search 20 different inventories, all on a price basis for my customer? And if I can't sell it at one of my dealers, but I can sell it at another, I want to do that because it's still revenue, top line revenue for all of my corporation in total, and everybody can benefit. I can do a spiff, I can do something else for a turnover of a vehicle lead or a sales consultant lead, a customer lead, but there's ways to address the complexity of being able to manage inventory at multiple stores at one time, and dealers know best how to do that. So great question.
Yeah, great question. Great answer. Okay, question here from Amber. Do you foresee the interest rates coming down in the future, or is this looking like the new norm for buying new or used cars? So are we going to see 0% again, David?
Well, actually, I have seen 0%. I think I just saw it a couple of months ago on a truck for one of the OEMs, one of the North American-based OEMs. I think those will be few and far apart. I think the criterion to get the lower APRs will be very difficult. Do we see it moderating? It's hard to tell. I don't have, my area of expertise is not in the financial markets. I don't do forecasting. If you look at the data that we're reading today, it does say there'll be a great moderation in terms of interest rates. I don't know about a big decline. I do know, though, stock drives a lot of the factors in the marketplace with regard to rates, residuals, and payments. And as day supplies float up, if they do float up, that will drive higher incentive spending, and it'll drive lower rates. It'll drive subvened rates from OEMs. Now, that's good and bad if you're a dealer, because a lot of the subvened rates from an OEM you can't mark up. If it's a standard rate, you can mark up. So there's pros and cons to that. It is attractive to consumers. I do think the lower APRs will be over shorter term rates because it's more affordable. Right. It doesn't expose the OEM as much. So there'll be a lot of factors that will come into play. Could it happen? Yes, it easily could happen. We have to remember that in today's marketplace, with the average vehicle price nearly $50,000 a unit, it only takes 20,000 units of production to generate $1 billion in revenue for an OEM. So, if you look at the forecast and things are looking tough from a financial standpoint, it's easy for them to flip the switch and say, well, let's just produce another, 20,000 units and generate 100 or $1 billion in revenue. The costs associated with that and the factors associated with that are difficult. So right now they're showing great restraint and they're showing fortitude in not doing that. If that happens and the market conditions have not changed, that means they'll have to force demand at the back end of that equation, and that means incentives will have to rise. If that happens, then you will probably see lower interest rates, better residuals, other factors, maybe higher percent of leasing mix that we talked about before. Other factors will come into play to help clear that inventory because they do want to keep the day supply at a very manageable number, and the number that we're seeing is around 45-day supply. And not only the next year, but the out years. That would be the desired outcome for the OEMs.
Okay. Okay. We have one more question here. And, you had this slide where you really, kind of described the different expectations of, millennials and versus boomers, Gen X, and just, the fact that, some of us didn't grow up with those expectations, with transactions and transparency. So with that, what are the biggest challenges online shoppers experience today in your mind?
Well, yeah, so again, there's two types of online shoppers. There's people that actually want to buy, which are 30% online. And there's consumers that are just doing research, which are 95%. And then there's two types of consumers. There's an analog consumer, somebody like myself that knows digital, knows technology, but I didn't grow up with technology. And then there's new consumers that are Y and Z that are coming to market. Their dollars are very influential, and they will soon surpass in terms of the sales mix of the marketplace to be the dominant factor in the marketplace. And when that happens, their buying characteristics and the shopping characteristics won't change. They grew up on Amazon, ordering everything on Amazon, utilizing Facebook, and now they transition obviously off Facebook, where we've stayed on Facebook. They've migrated to new platforms, especially TikTok, but they're moving for the platforms that feed their need for speed, transparency, and with that will drive a lot of the outcome in the future. If the industry doesn't migrate very quickly to support this, it's going to be really challenging for these consumers, and they'll find different outlets. That's why they'll migrate to third-party outlets that will have solution sets if the OEMs don't create their own solution set that lets them do an end-to-end shopping solution. They need to be able to get the price of the vehicle. Again, the same price that I'm going to see on a tier 1 side is tier 3. It's got to be flattened. Then they need to be able to understand what their trade is, if there's any F&I products that they want to buy, and then what's the financing terms and conditions for the deal. They need to be able to get all the way to a wet signature, and if possible, bypass the wet signature. And if they can do that, then they're going to be very satisfied. And by the way, they need to do that in a matter of minutes. And there are going to be solutions in the marketplace that will show them that payment and that solution within minutes in the future. And so it's not hours, it's not days, it's going to be minutes. And so we're going to see a very quick movement in that. And you know, anybody talks to their kids today in the marketplace about anything, the first thing they're going to reference and they're going to fact check is on Google. Then the second thing is they're going to price check on Amazon. So there'll be other applications that'll support that, but we have to be very, very understanding that the market will dictate winners and losers in this space.
Yeah, it's so true. So David, we've reached the end of our webinar. Any parting thoughts? I mean, you've covered so much ground. It's really, really interesting and really timely.
Well, thank you, Emma. There's a lot to cover. You know I try to go fast in certain segments. If anyone wants to learn any more about our products or solutions or any of our impressions in the marketplace, we have a wealth of subject matter experts at S&P Global Mobility. We have industry experts that do forecasting. We have our Polk Automotive Solution team does an amazing job at looking at loyalty and conquest customers and how to refine those lists for dealers and for OEMs to market to. Then we have a great aftermarket business as well. As far as pricing, incentives, and optimization, we have great expertise in that, and we can help you with any of the products we talked about, especially mDrive, if anyone has interest. Just reach out to us or give us an email, and we'll have somebody follow up with you fairly expeditiously. Thank you so much, Emma. We've enjoyed being on the broadcast today.
Yeah, perfect, David. That brings us to the end of our webinar. Thanks to today's audience for the questions. If you asked a question that we didn't get a chance to answer, our friends at MarketScan will follow up by email. If you learned something from this session, please tell your peers about it. The recording will be available in about an hour. You'll find it at autonews.com/webinars. When the webinar ends, a survey will pop up on your screen. We genuinely appreciate your feedback as it helps us create future webinars that are even more beneficial to you. Thanks again to David and MarketScan for bringing us this presentation, and to you for joining us. On behalf of everyone at Automotive News, have a great rest of your day.